Jai Hind everyone. Welcome to my YouTube channel, which is Explore Your Sales, Banking and General Knowledge, etc. Today I will discuss interview questions and answers related to the internal promotion examination for banks. Welcome to part 15 of my Path to the Corner Office 2025 to 2026 series, where I simplify bank promotion examination interviews with practical questions and answers examples to help you climb the banking career ladder faster. Interview questions and answers from Public Provident Fund (PPF). What is Public Provident Fund (PPF)? PPF is a long-term small savings scheme backed by the Government of India, offering tax benefits, assured returns and capital protection. Under which act is PPF governed? PPF is governed by the Public Provident Fund Act 1968 and subsequent PPF scheme rules. What is the objective of PPF? To encourage long term savings and financial security with tax efficiency. Who can open a PPF account? Any resident individual of India can open a PPF account in their own name or on behalf of a minor. Can NRIs open a PPF account? The answer is no. NRIs cannot open new PPF accounts, but existing accounts can be continued till maturity. How many PPF accounts can a person open? The answer is only one PPF account per individual. Can a joint PPF account be opened? No, PPF accounts cannot be opened jointly. Where can a PPF account be opened? At designated bank branches and post offices. Is Aadhaar mandatory for PPF? The answer is yes. Aadhaar is mandatory as per government directives. Can a minor have a PPF account? The answer is yes. A guardian can open and operate the account for a minor. What is the minimum annual deposit in PPF? The answer is Rs 500 per financial year. What is the maximum annual deposit? The answer is Rs 1.5 lakhs in a financial year, including minor accounts. How many deposits are allowed in a year? The answer is no limited number of deposits in a financial year. Can deposits be made lump sum or in installments? Both options are permitted. What happens if minimum deposit is not made? The answer is the account becomes inactive and can be revived with a penalty. Who decides the PPF interest rate? The answer is the Government of India decides and notifies it quarterly. How is PPF interest calculated? On the lowest balance between the fifth and the last day of each month. When is PPF interest credited? The answer is annually at the end of the financial year. Is PPF interest taxable? The answer is no. PPF interest is completely tax free. Is PPF a fixed or floating interest scheme? It is a floating interest scheme revised quarterly. What is the tenure of a PPF account? 15 years from the end of the financial year of opening. Can the PPF account be extended? The answer is yes, in block of 5 years with or without contribution. Is premature closure allowed? The answer is yes, after 5 years of for specified reasons like medical treatment or higher education. What is the penalty for premature closure? The answer is interest is reduced by 1% from the applicable rate. Is nomination facility available in PPS? The answer is yes, nomination is allowed. When can a loan be taken against PPF? The answer is from the third to the sixth financial year. What is the maximum loan amount? up to 25% of the balance at the end of the second preceding year. What is the interest rate on PPF loans? The answer is 1% higher than the prevailing PPF interest rate. When can partial withdrawals be made? From the seventh financial year onwards. How many withdrawals are allowed? One withdrawal per financial year. Under which section is PPF investment eligible for tax deduction? Section 80C of the Tax Act. What is the tax status of PPF? Triple E exempt at investment, interest, and maturity. Is PPF attachment proof? The answer is yes. PPF balance cannot be attached by court orders. Can PPF be pledged or assigned? No, PPF cannot be pledged or assigned. Is PPF suitable for retirement planning? Yes, due to long tenure, tax-free returns, and sovereign guarantee. Can a PPF account be transferred? Yes, between banks and post offices across India. What documents are required for transfer? Application form, passbook, and KYC documents. Can PPF be operated online? Yes, through net banking of authorized banks. What happens to PPF on the death of the account holder? The nominee or legal heir can claim the balance, the account is closed. Is PPF interest payable after maturity if not withdrawn? Yes, if the account is extended. Why is PPF considered risk free? Because it is backed by the sovereign guarantee of the Government of India. How does PPF differ from EPF? PPF is voluntary and open to all individuals. EPF is mandatory for salaried employees. How does PPF differ from NPS? PPF offers guarantee returns. NPS is market linked. Why do banks promote PPF? It enhances CASA base and customer retention. What compliance checks are required in PPF? KYC, PAN validation, deposit limits, and AML monitoring. What if a customer deposits more than rupees 1.5 lakhs? Excess amount is refunded without interest. What if nomination is not done? Legal heirs must submit succession certificate or legal proof. Can a guardian withdraw from a minor's PPF? Yes, for the benefit of the minor with declaration. What if the account holder becomes an NRI later? The answer is the account can continue till maturity but no extension allowed. Can PPF be closed after 15 years of medical reasons? The answer is yes, subject to documentary proof. Why does the government revise PPF rates quarterly? The answer is to align with market interest rates and fiscal policy. Is PPF suitable for short-term goals? The answer is no, it is best suited for long-term goals. What role does PPF play in financial inclusion? It promotes disciplined savings among retail investors. How does PPF help in tax planning? By reducing taxable income under Section 80C and providing tax-free returns. What advice would you give to a young investor? Start early to benefit from compounding over 15 plus years. How do you handle PPF customer grievances? The answer is by verifying account details, adhering to rules, and timely escalation. What precautions should banks take in PPF operations? The answer is limit checks, KYC compliance, and correct interest calculation. What is the role of CBS in PPF? The answer is ensures uniform interest calculation and centralized monitoring. How does PPF strengthen customer relationship? It creates long-term engagement with the bank. Why is PPF important? Answer is because it is a flagship retail savings product with regulatory importance. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.